Hello everyone. Welcome to the Blockchain News Club. Let's take a brief intro into today's crypto updates before going into the details. A new academic study of bank fragility concludes that 186 U.S. banks remain vulnerable to a run on deposits. Robert Kiyosaki, the prominent investor, that more and more dominoes are falling, caused by the crash in the banking sphere as large banks have been going bankrupt one after another. Shark Tank investor Kevin OLeary is advising startup CEOs he works with to limit their bank deposits and says firms need to brace for other possible bank collapses. Attorney John E. Deaton has said that the Hinman documents would eventually be made available to the public. Crypto Analyst has reported that investors has bought 420 million XRP worth $155 million in recent weeks, according to Santiment data. Before we dive deep into today's updates, please subscribe to our Blockchain News Club channel. It will help us immensely. Academic study flags 186 banks as vulnerable to a run as Silicon Valley Bank. A new academic research on bank fragility says that 186 U.S. banks continue to be susceptible to a run on deposits similar to the one that brought down Silicon Valley Bank, Signature Bank, and Silvergate Bank last week. The research by 4 academics indicates that the market value of the U.S. banking system's assets is $2 trillion less than their book value, when loan portfolios held to maturity are considered. According to a report published on Monday, mark-to-market bank assets have decreased by an average of 10% across all banks, with the poorest 5th percentile witnessing a 20% fall. The 20-page paper on uninsured bank deposits was written by Erica Zoivai Zhang of the University of Southern California, Gregor Matvos of Northwestern University's Kellogg School of Management, Tomasz Poskorsky of Columbia Business School, and Amit Seru of Stanford University. Researchers discovered 186 banks with negative insured deposit coverage ratios. The banks in this category may endanger insured savings. The report did not identify the institutions or consider the effect of the Federal Reserve's recently announced Bank Term Funding Program. Several other U.S. institutions share a number of the reasons that contributed to the failure of Silicon Valley Bank. Nevertheless, Silicon Valley Bank was an exception due to its disproportionate proportion of uninsured deposits. The analysis concluded that just 1% of banks in this category have higher uninsured leverage than Silicon Valley Bank. Yet, 10% of banks have worse unrecognized losses than Silicon Valley Bank, and 10% of banks have less capitalization than the controlling company of Silicon Valley Bank, SVB Financial Group SIVB. Rich Dad, Poor Dad author to issue emergency podcast as global financial crisis worsening. Robert Kiyosaki, a notable investor who built a fortune in the real estate industry and then shifted to educate people about money after releasing the best-selling book Rich Dad, Poor Dad, tweeted that he believes the global financial crisis is growing worse. The investor noted that more and more dominoes are falling due to the banking sector's collapse, as significant institutions have been filing for bankruptcy one by one. 3 large U.S. banks, Silvergate Bank, Silicon Valley Bank, and Signature Bank, are currently bankrupt and closing their doors. Strangely, all 3 banks have actively collaborated with cryptocurrency exchanges and stablecoin issuers like Paxos. Ripple had a tiny exposure to SVB, but the bank's failure will have no effect on the company's day-to-day operations, as stated by Ripple's CEO, Brad Garlinghouse. Once Silvergate and Silicon Valley banks failed, Kiyosaki predicted that a third significant bank would soon fail. He did not, however, provide particular names. Some days later, Signature Bank failed. Kiyosaki recently warned that collapse and catastrophe were just beginning. Pensions, IRAs, 401ks went awake and are going bankrupt. As a remedy for the present financial crisis, he advocated purchasing Bitcoin, silver, and actual gold. Some individuals in the tweet's comments also inquired about Bitcoin and silver. Rich Dad, Poor Dad author will release emergency podcast as global financial crisis worsens. Kiyosaki says inflation will surge more, impact Bitcoin price. Robert Kiyosaki published a new video podcast on his YouTube channel, the Rich Dad channel, on March 19, 2023. Kiyosaki stated that the current position of inflation is systematic, and people should be aware of this scenario in advance since they would soon be compelled to pay prices. A few weeks ago, the Federal Reserve assured the public that the present inflationary pressures on the U.S. economy are transitory and will soon diminish. The financial author stated that the Fed does not portray the entire picture in a transparent manner, and that they are in fact lying. Kiyosaki also predicted that as a result of the fall of a number of major American banks, there will soon be another increase in inflation. Instead of utilizing government income, he asserted that the Fed will generate counterfeit money to save the failing banks. In summary, Kiyosaki believes that the government would boost the US dollar money supply in the US economy in order to assist these banks, which is not the wisest course of action because it will merely add to the pressure on the public. Previously on March 13, 2023, Kiyosaki had a similar perspective and stated that the Fed will manufacture additional counterfeit bills to bail out failing banks. He recommended that individuals purchase Bitcoin, gold, silver, etc. Shark Tank investor Kevin OLeary says he's telling startup CEOs to limit bank deposits and brace for the next black swan idiot blowup. Kevin OLeary, a Shark Tank investor, is telling startup CEOs he works with to restrict their bank deposits in the aftermath of the Silicon Valley Bank collapse. He also warns that enterprises must be prepared for additional prospective bank failures. We have instructed our CEOs not to invest more than 20% of their liquid assets in a single institution. No matter who you know or how large the bank is, there is always the next black swan boss who is an idiot. So we have no idea who they are, Wednesday, OLeary stated in an interview with Yahoo Finance. His remarks came immediately after last Friday's demise of Silicon Valley Bank. Its collapse has prompted a sharp sell-off in bank stocks and predictions of a 1980s-style financial catastrophe, but the issues are less structural and more attributable to idiotic management and an incompetent board that knew nothing about banking, according to OLeary. He noted that part of his own firm's assets were held at the bank, but did not divulge the entire amount. OLeary criticized the SVB's large exposure to long-term bonds in particular. Due to the Fed's interest rate rises to contain inflation, bond values have declined over the previous year, resulting in $620 in unrealized losses across all U.S. institutions, according to FDIC estimates. Other commentators have stated that the risk of contagion from Silicon Valley Bank's fallout is low, but OLeary remains concerned about the impact of regulators' response to the crisis, which includes reimbursing all SVB and Signature Bank depositors, even those with deposits exceeding the typical $250,000 threshold. This undermines the FDIC's typical requirements for deposit protection, and also makes bank stocks inherently riskier, according to OLeary, because bank management may now feel free to take on more risk to increase stock prices, even if it endangers the security of deposits. Earlier in the week, OLeary encouraged investors to never purchase bank stocks again since the precedent set by SVB's failure indicates that the government has nationalized the industry. Thursday, a syndicate of large banks injected $30 billion in deposits to bolster First Republic Bank, another regional bank under strain. Ripple lawyer says Hinman documents will be made public by the judge. John E. Deaton, an attorney, has stated that the emails and papers used for Bill Hinman's disputed 2018 address at the Yahoo Finance All Markets Summit, often known as the Hinman materials, will ultimately be made public. If Judge Annalisa Torres mentions them in her summary judgment order in the SEC lawsuit against Ripple, the records might be made publicly accessible with some redactions. Notably, Deaton previously made a Freedom of Information Act request requesting the publication of the emails and drafts, and he has declared his intention to take legal action. If Judge Torres cites to or relies on the emails/drafts in making her decision, I am 75% sure that she will declare them judicial documents and order that they be unsealed but with limited redactions. But even if she doesn't, the emails and drafts are going to be made public. Explaining why he is so certain, the attorney stated that other enforcement proceedings, including those against Coinbase, Kraken and Binance US, will be taken. In addition, he stated that he expected the exchanges would face legal action for selling securities a year ago. He also stated that a lawsuit is pending against Dragon Chain. The Ethereum blockchain administers DRGN, an ERC20 token, and he believes they will want to get these communications and drafts to bolster their argument. Rumor has it that 200 to 300 projects have been issued subpoenas and dozens of companies have received Wells notices. Eleanor Tourette reported Gensler has beefed up his crypto enforcement team. And that's after doubling it last year. His comments follow Ripple CEO Brad Garlinghouse's criticism of the SEC's lack of consistency on disclosure, openness, and clarity. When the truth is ultimately revealed, the shamelessness of the regulator's conduct, according to Garlinghouse, will be startling. 420 million XRP bought by massive whales as price braces for next move. Since February, Ali, a crypto expert, has reported big whales joining the XRP network. According to him, 50 whales, or huge investors with 10 to 100 million XRP, entered the network recently. According to Santiment statistics, this class of investors has purchased 420 million XRP worth $155.4 million in recent weeks. At the time of writing, XRP was trading at $0.383, a little gain over the previous day. The daily RSI shows a balance between bulls and bears because it is just over the neutral 50-point threshold. To the upside, a notable resistance level for XRP is the daily MA200, or $0.399. On March 19, XRP temporarily surpassed this milestone, reaching $0.401, but bulls were unable to sustain the advance. If XRP breaks decisively over this significant milestone, it might climb as high as $0.433, or perhaps 50 cents. Yet, if the $0.399 barrier is not breached, the XRP price may meander in a narrow range before making a significant move. On the other hand, $0.355 looks to be collecting support to prevent possible drops. As indicated by the amount of new accounts generated on the XRPL network, XRP's network is expanding. According to statistics uploaded on the website of the XRP validator, there were 1,958 new XRPL members on March 19. In related news, Ripple's managing director for APAC and MENA, Brooks Entwistle, says that despite recent market setbacks caused by bank failures, Ripple is committed to expansion. Entwistle cited a conference in Seoul, the Policy Summit Series in the Asia-Pacific, at which Ripple addressed the future regulatory landscape for blockchain and cryptocurrencies in South Korea. He also mentions an African blockchain-related conference. Thank you for watching. Please subscribe to our channel for regular updates in the blockchain community.